All right, my friends, we are live. Welcome to the very first episode of this new live stream series that I'm calling Walk to 100. And I want to explain the name first and foremost because it's kind of out of left field. I mean, as you can see here, I'm at my normal spot at my walking or at my standing treadmill here. Let me slow this down. And I'm walking. So a couple weeks ago or a few weeks ago now, and hopefully you can hear me okay. I hope I'm not too far from the mic, but a few weeks ago, I bought this, I guess you'd call it like a treadmill, and I just put it right under my desk here. So since I bought this, my morning routine has been to just get up, have some coffee, read a little bit, and then come over here, set up my treadmill, turn on some Seeking Alpha, look at what's going on the market, look at what's going on in my portfolio, read some articles, and it's been a really solid morning routine. But I thought, since I'm going to be doing this is something I'm already doing anyway. I might as well stream it because the timing was such that it was, pretty soon after the market opened. So I figured, this could be kind of a fun way to kick off the day. It'd be a fun way to put some content out, and it'd be a fun way to spend some more time with you guys. So why walk to 100? Obviously, once again, I'm walking here, and my goal once I got this treadmill, I told myself, okay, just on top of lifting weights and doing cardio at the gym or whatever, I think this treadmill just throughout the day, whether I'm working, whether I'm just, I could set it up in the living room as I'm watching TV. It's very portable. And by the way, you guys can check out this treadmill. I linked it in the description of the video, but I was like, my goal is going to be to burn an extra 100 calories per day. And so far, I've been pretty successful at that. It's actually been pretty easy to do. As you can see, I'm not walking very fast, so it does take a little bit of time. And so far, I've been walking for about 20 minutes, and I've burned 30 calories. So, guys, this live stream, the name behind the live stream series, Walk to 100, the rule is going to be I cannot, with these streams, I can't stop walking until I hit 100 calories. I'm getting it done here. This is going to hold me accountable. I got to get those 100 calories in. So I'm walking to 100. In addition to that, part of this streaming series, it's going to be kind of like also a daily update to my portfolio, which some people might not care about. But anyway, every single day I'm going to be just showing you what's going on in the portfolio, show the value on a daily basis, Monday through Friday. And as you guys know, building wealth with this stuff, it does not happen overnight. I talk about it probably too much. It's a slow burn. It's a slow process. Much like burning calories, building your portfolio is something that happens step by step. And my goal right now, I'm at about 50. We'll take a look at it in a moment, but I'm at about $52,000 in my portfolio. I'm on a mission to get this to $100,000. So, because it doesn't happen overnight, because it is a slow process, you do it step by step. So in that way as well, we're also walking to 100. So for those two reasons, number one, because trying to burn 100 calories, and number two, because I'm trying to get my portfolio to $100,000, I figured Walk to 100 was a fitting name. And real quick, guys, let me know in the live chat. Can you guys? Does it sound okay? Can you hear the treadmill in the background? Am I loud enough? I feel like I'm a little too far from the mic because the setup's a bit different than what I'm used to. So let me know, like, if there's any issues on your guys' end. I'm curious to know how it looks, how it sounds, all that stuff. And Luis says, yeah, it'll be fun to hear Ryan try to catch his breath. Yeah, so I mentioned a moment ago, I'm 30 calories deep so far. Now I'm about probably 35. We're going to go to 100. And this might be a little bit of a longer stream today. But my goal moving forward is to be start walking probably 45 minutes or so before I actually go live. And that way I can burn at least half of those calories, 60, 70 calories that way. By the time we hop on the stream, it's not like an hour-long stream. So my goal with this, guys, like I said, Monday through Friday. We're going to do this the entire month of November just to see how it goes. Just to test it out. I don't want to commit to this new series forever. I just kind of want to see how it goes for this first month, and then we're kind of gonna kind of go from there. And along the way, things might change in the stream. I might change the setup a little bit. I might, instead of using this camera, use that camera. Anyway, it'll probably evolve throughout this month in some way, shape, or form, as will the format, the stuff we're talking about, and stuff like that. And I'm glad to see that I'm glad to see that there's no issues on your guys' end. But tying this all together, before we get into the stock stuff, just kind of hashing out the name a little bit more. I mean, you guys know, you've heard me talk about it numerous times, especially on the live streams. I feel like there are so many comparisons to, there's so much symmetry between, health and fitness, which is outside of investing, is something I'm really into, and investing. I mean, both are, the results don't happen overnight. Both take discipline, both take consistency. The success with both of them is built on the back of, small, I guess, steps forward, taking it step by step, walking instead of sprinting. It's a marathon, not a sprint, obviously. So I feel like there's a lot of things that tie these two together. And for me, this live stream series is a way to kind of combine the two in a sense and document the baby steps forward in both department, because like I said, trying to grow the portfolio, but at the same time I'm trying to shed some pounds on the scale. I'm trying to lose a little bit of weight. All year that's been my goal. Just truth be told, I started the year, I'm not super proud of it, and I'm not a tall guy either, guys. I'm 5'8", I'm not very tall. But I started off the year, probably, this is by design too, on purpose. I started off the year probably at about 190-ish pounds. At my heaviest this year, I was 190, 192. I was trying to gain some weight, pack on some size and some strength, which worked really well. But it was, I was pretty hefty, guys. I did not feel good. I was to a point where I was like, you could hear me breathing, kind of like as you do now. It was a bit more out of breath. It was harder to move. And so I was like, yeah, I can't be this way. So decided to start losing some weight. I think in maybe towards the end of February or March, I started, actively trying to shed some pounds. And from that point, 190, 192 at the heaviest, to now I'm down to about 175. So that's been a really slow process, half a year or so. Well, no, actually longer than that, 8 months, 9 months that I've only dropped like not even 20 pounds. But slow and steady, guys, wins the race. And, baby steps forward. That's what it's all about in both departments. So, hey, tying it all together, here we are for Walk to 100. I'm so happy that you guys decided to tune into this first episode. I hope you enjoyed this live stream series. And also at the same time, I hope this serves as a reminder that things don't happen overnight as we go through this day by day with its many ups and downs in the market and whatnot. And also on the scale as well, by the way. I hope this just serves as a reminder overall that this stuff doesn't happen overnight. And then it really is baby steps forward. It's a long journey, but it's achievable if you just stay disciplined, stay consistent, and take it step by step. So that's what this stream is all about, is documenting that. And, after this spiel, we're 10 minutes into the stream now. We are now 40 calories deep. So we've got 60 to go. I'm walking at a pace of 1.5 miles per hour, so not very fast. I'm hesitant to bump up the speed too, because I will get out of breath and I don't want to do that. So we're just taking a leisurely stroll. We've gone about 30 minutes, or I have about 0.8 miles, and we are 2,500 steps in. So that's another cool thing too. You guys hear people talk about, you got to get your 10,000 steps in. We're going to do it before it even hits 8 o'clock. So that'll be nice to get that out of the way. But anyway, guys, that's what this stream's all about. Sorry for the tangent, but I felt like I needed to spend a little bit of time explaining, explaining what the stream is about. I want to go through and say what's up to all you guys here in the chat. Let me zoom all the way up to the top here. We got, let's see, I'm going to go all the way back to 7 a.m. when we first started. I see my man Kama in the building. I see Dean, the lean, mean Dean machine. I see Thomas. What's up, Thomas? Ryan, Adon, on my morning 5-mile walk. I love it, guys. I love it. And that's another thing too. I hope just by seeing me do this, I hope it inspires you guys to do something similar. I think, and I really don't mean to shove the health and fitness stuff down your throats. You guys already know it's an important thing, but think about it. Like time, how do I explain this? So think about time in the market versus timing in the market. The longer your time horizon, the better off you're going to be, the more your portfolio is going to grow. Now, this component, this health and fitness component, is going to not ensure, but it's going to increase the likelihood that you will be able to keep that compounding and see that compounding happen for a longer period of time. Hopefully by doing this and staying active, we never really know, but hopefully it could, help expand the lifespan a little bit. It couldn't hurt. So this is also an attempt to see my dividends from a long period of time, thinking another 60 years down the road, be able to see my dividends and see my portfolio grow as big as it can. And so you got to stay alive for that to happen. And so this is also an attempt to do that. So, but I hope it inspires you guys to do the same. It's, living a holistically well life. I'm not trying to preach, but financial health is important, and so is physical health. And this is one easy way that you can make both of them happen. Just by tuning in, getting your steps in. It doesn't have to be anything super strenuous. 100 calories a day, 50 calories a day, 5,000 steps, 10,000 steps every single day. That the impact of that can compound over a long period of time. And it's not, probably won't even break a sweat doing this. So just small, sweet, small steps here. And Adon's really like up in the ante with his 5 mile walk. Good for you, my friend. Anyway, moving on, we got Fast Eddie here. What's up, Eddie? Sebastian, Will, Shelly. I think I said what's up to Luis already, but if not, what's up, Luis? Here we go. Drinking coffee, waiting for my cash to get in to buy some shares this week. I love it. And then Ryan, this is true. A great morning to discuss Realty Income. I would love to do that. I'll be doing that just in a little bit. I was actually reading up a little bit about, I read about it a couple days ago, or yesterday, I guess, when it all went down. And I feel pretty good about Realty Income. We'll talk about that momentarily after we go through just some market stuff, go through my portfolio, show you what's going on. We'll circle back to Realty Income. And then Daniel said, I thought this was a walk to 100K. It is, it is, in a way. And one thing too, I might be getting a little bit ahead of myself, but one thing I've thought that I think would really make this stream cool and would really, help the cause. If my mission really is to get this to 100K as fast as possible, which is Charlie Munger says, the first 100K is the hardest, but you got to do it. You got to crawl your way there. Or in our case, you got to walk your way there. I've thought too, if this becomes, like I said, we're just going to try out this stream series for a month. I'm going to be dedicated to it Monday through Friday throughout the entire month of November. But after that, if this is something that stays in the content lineup, if this is something that I decide to keep doing, and if everyone's loving it, for the sake of the mission, I might even go so far as to say, minus money set aside for taxes, all the revenue that comes from these streams will go directly in the portfolio. That's something that I'm heavily considering. I think that that would be really cool, and that would hold me accountable to continue doing this. And it would also, like I said, help the cause. And I'm going to be doing this stuff anyway, whether I'm streaming it or not. So at this point, I don't see any reason why I wouldn't continue it. But, we'll see what happens over this next month. It's going to be interesting. But yeah, Daniel, it's a walk to 100K. We're gonna get there slowly but surely. Luis says we need a calorie counter on the screen. I know I don't think I can accommodate that, unfortunately, but I do think that'd be a really good idea. That'd be fun. Yeah, Stoner's Jim says burning calories like WP Carey burns shareholder trust. There you go. Let's see. Jarian says make this a regular live, man. Well, for the month of November, I'll be here every morning, every weekday morning, 7 a.m. Pacific time, 10 a.m. Eastern time for you guys to tune in with me. And I want to know too, like, let me know in the comments or in the live chat, what are you doing right now as you're watching this? Are you at home getting ready? Are you at work? Are you on your way to work? Are you making that commute? What are you doing right now as you're watching this stream? I'm curious to know what everyone's morning is looking like. So, and I'm, some of you guys aren't even here in the States, so it might even be PM for you, but I'm still curious. Let me know. Fast Eddie says, have you ever figured out exactly how much money out of your pocket you've put in your portfolio? Out of the 52,000, how much is actual cash out of your pocket? I would imagine it's close to $40,000, somewhere in that range, but I'm not 100% sure on that. And then Brad here says, just curious on how much you invest on a monthly/weekly basis. And I was supposed to be saying what's up to you guys. So, but I'll answer this question. I'll get back to my greetings. So Brad, every single week across both of my portfolios, I invest $215. I just upped it from $200 to $215. That extra 15 is going into the Roth. And yeah, going to keep that going. So hopefully over time, I'll continue to increase it. That's my goal. Board retiree, what's going on? Jack Murphy, what is up, man? Let's see. CA's, good to see you. We got B still in the building. My mom's here. Hey, Ma. Um, so happy to be here. I love that. Let's see. Colton sounds good to me. Cool. I'm really glad to hear you guys can't hear the treadmill. It's super quiet. And like I said, this thing is super portable. If it's not here, I just store it under my coffee table that's right behind me. You guys know that, are familiar with that right there. But then other times, like if I'm just watching TV and feel like walking, I'll just move it over to the living room. Super portable. It's been a really great purchase so far. And if you guys want to check it out, there's a link to it in the description. It's like the first line right there. Who else we got here? Rui, what's up, Rui? Kevin. We got Brad. I think I might have said what's up to Brad already. So, yeah, this is a good point. I think they should implement this in the office environment as well. Any improvements in health is always a positive. Yeah, and a lot of people think when you think of working out, no, not many people well, a lot of people like working out, but a lot of people don't. But being active and staying physically active is something that's important for everybody. And I think something like this is such an easy thing to do that if you don't like, I don't want to run, I don't want to lift weights, I don't want to whatever it is that you don't want to do. I don't want to do karate. I don't know karate, but I don't want to take a boxing class. I don't want to do spin class. This is something that you can easily do. You can fit it. If you want to just watch TV, like just buy something like this, put it in front of your TV. It's so easy. It's just so simple. It's like kind of like with investing these days, there's just no excuses. There's really no excuses unless you there are some if you have some really pressing physical disability, but outside of that, there's no excuse. This is too easy to not do. In the same way that investing $5 a week into your portfolio is just, there's no excuse. So, let's see here. We got Chris. What's up, Chris? Yeah, looking to shed some pounds as well. And for those of you guys too, another question for you. For those of you who are into health and fitness at all, maybe do something in this capacity already, or those who have thought about it, but haven't taken action on it yet, let me know. Like, do you guys have any goals in this department? We often talk about finance, goals there, growing the portfolio, but you guys have any goals as it pertains to your physical health as well? I'm curious to know. So, oh my gosh, Brad says next he'll be wearing the mankini. Yeah, just call me Vera DeMilo. Let me know if you guys get that reference. Let's see. We got Trail Vega, Adam, Joe, what's up? 10 minutes in and just repeating yourself. I know. Get used to it, man. Who else we got here? Let me scroll up. Anyway, we're just going to, okay, see what you guys are doing. Fast Eddie eating breakfast. Luis, Ryan working from home. Rui at home working. Miguel getting ready. Okay. Nice. At work on that 24-hour duty, MPC Rio. Okay. Well, guys, how about we switch gears and finally get into some stock stuff 20 minutes into it. And I promise in the future, I'm not going to ramble on this month, or ramble on this much. We'll get more down to business. But the first things first, guys, let's go take a look. On the market, see what's happening in the world of dividend investing. So over here, guys, this is my watch list. It's not my due diligence list. This is just a running list of pretty much every dividend stock I can think of. And one of the first things that I do every day, every morning, is I'll hop over here. I'll see what the best and worst performers are. See what's up the most, see what's down the most. Usually if there's something with now I'm getting out of breath. Usually if there's something with like a crazy gain, there's some news behind it, and the same is true with losses, right? So if we change the gain here, we're going to organize it by best performer, and we can see we've got a few stocks up by quite a bit so far this morning. Scott's Miracle-Gro up 16.7%, and then BIP Brookfield Infrastructure Partners up 8.6%. So let's see what's going on with these two. I'm curious to know. I'm guessing it's earnings related for the gain, but let's go check it out here. So yeah, it looks like it. So Scott's Miracle-Gro, huge jump after beating on the top and bottom line for their earnings. But interestingly enough, I mean, yes, they beat, but at the same time, look at this. It's not so rosy, guys. They're still, negative earnings. They're still losing money there. So that's not great. And the revenue is down 24% year over year, but they're up so much just because of the beat. So I would call this overall, I would say this is not that great. And actually, I remember back in the day, you guys probably remember this too. I was pretty hyped on Scott's Miracle Grow for a while. And truth be told, this stock, to be fair, I should say, this stock is the I guess the leader in the plant department in this industry. They have probably the strongest brand. They're the most recognizable company. They also own Bonnie plants. So if you go to like Lowe's or Home Depot, a lot of the plants you buy, a lot of the seeds that you end up planting are from Bonnie. And you'll always see if you drive by either of those places in the morning or throughout the day, you'll see the Bonnie plants truck that's owned by Scott's Miracle Grow here. And I was pretty hyped on this company for a while. I remember it was back. Let's see if we can zoom out on this chart a little bit. Maybe, yeah, it was prior to this year. It was sometime last year, but I was getting excited about Scott's Miracle Grow right about, oh, I'd say right about in this range, guys, right about somewhere between 100 and 120 bucks a share. I was like, yeah, look how far down it's gone. It went from 250 all the way down to 120. It's been cut in half. It's just, I thought it was a pretty discounted deal, but lo and behold, I was certainly wrong. And I got to thank Mr. Income in the Discord group for talking me off the ledge with that one, because I remember I was talking about it in there, and I don't know, he definitely motivated me to think a little harder and look a little closer at it, and I'm sure glad I did, because this one was, it's just been in trouble. It's just been in trouble, and I think after this recent earnings report, I don't think much has changed. But another reason I was pretty hyped on this stock was the dividend stats. I mean, look, the starting yield right now is very nice. It's about 6%. I think when I was looking at it, it was probably, well, it would have been half that. It would have been in the threes, perhaps. Excuse me. 5-year growth rate's nothing too crazy, 4.3%, but they do have a pretty decent dividend growth streak of 13 straight years. But nonetheless, guys, it's not been great for Scott's Miracle Grow. But interesting to see them up so much. Now, if we go over to BIP, what's going on with these guys? So definitely looks like earnings related too. So partners FFO of 0.73 misses by 1 penny. But however, the market still liked the earnings news. Not much other news here. Great results with organic growth. I mean, a 1 cent miss is never, no, I don't want to say never, but it's really not too bad. So it definitely could have been worse. But okay, looks like their jump was earnings related too. Now let's switch gears, going back over to the watch list, and let's see the worst performance. It looks like, well, hold on. Let's see here. Sorry, guys. Because there's so many stocks on this watch list, it just kind of takes a while to load. So Estee Lauder, oh my gosh, we've got to talk about VF Corporation as well. So Estee Lauder down 19% today. That's insane, guys. Crazy, crazy drop for this company. And furthermore, look at this. Look at this drop in the last year. They're down 50.4%. They've lost over half their value in the last 365 days. That's crazy. But still, even with that, the PE ratio is like very high, 35. Very interesting. But if we scroll down here looking at the news, it looks like, okay, so they beat on the bottom line. The loss was earnings related. So they beat on the bottom line, but missed on the top line. So sales were down compared to estimates. Earnings were up. And this is probably, well, revenue is down 10.6% year over year. So that's definitely something. The company is lowering its outlook to reflect the slower pace of recovery in net sales and margins as a result of incremental external headwinds. Okay. So this is why it's down. Sales are forecasted to continue decreasing. I thought I read something about, anyway, maybe not. I'm just talking out of my butt. Okay. So anyway, that's what's going on with them. But I've never really looked at this company. Let's see. Let's take a look at their dividend stats. Decent yield. I mean, this is typical. Well, kind of, sort of. Okay yield on the lower end. Payout ratio is pretty high for what otherwise looks like a dividend growth stock, double-digit growth CAGR. 2% yield. This is pretty standard. We'd see very similar stats with higher yield, though. If we'd look at something like Snap-on or Lowe's or Starbucks, but the difference here is the payout ratio. The payout ratio is up quite a bit, 75%. And the dividend growth history is not really great. Only 1 year of growth. And yeah, this says 1 year of payments, but that's not true. I mean, it looks like they just, maybe Seeking Alpha's tripping on this. This actually doesn't look like too bad of a dividend growth history. I don't know. But anyway, moving on to VF Corporation, guys, down 6.5%. I know why this one was. So this company, this company cannot catch a break. I mean, Just like what we saw with Estee Lauder, it's down actually 52% in the last year. So even more than the last company. This company, so VFC, which owns famous clothing brands like Vans, North Face, Dickies, Supreme, JanSport, brands like that. They a few months ago they cut their dividend, and they were a dividend king. They had a pretty nice dividend. They were a dividend king. They cut it a few months ago, but they just cut it again by 70%. So I believe that's 2 dividend cuts this year. So this is why the stock is down so much, and this one just cannot catch a break. It's been such a poor performer, but recently I remember it had kind of a nice jump. We can see that right here. If we go into the last month, it had kind of a nice jump because I think there was an activist investor that bought in, or maybe even a couple of them, and that pushed the share price up, not by much, and it didn't have any lasting effect, but that was something that did happen. I remember with VFC, and I want to like this company. I really do. I'm a big Vans person. I always have been. I love Vans. Pretty much exclusively the only shoes I wear. And because of that, I've wanted to like this company so much more than I do, but it's just one of those that I can't get behind. And I'm glad that I never pulled the trigger on it. But anyway, let me see what's going on in the live chat real quick. Then we're going to jump over to the portfolio. Yeah, Dean, I'm glad you got that Vera DeMilo reference. That's funny.
Hi, I'm Vera DeMilo.
You guys just look it up on Google Vera DeMilo, look it up on YouTube, classic Jim Carrey skit.
Bumped, beautiful, and bitchin'.
Oh, I think that was the first time I said a bad word on this on my channel. I did not mean to do that. Sorry, guys. You let me slip. Man. Okay, so let's see. Oh, Ryan, this is a really good question. Do you always have cash in your brokerage account to buy stocks when they go on sale? Not always, no. I have a nice chunk of change in my checking account right now, but I don't usually keep some in the brokerage account. I just, buy every single week. And if something were to happen and I really wanted to throw some money in, I would just transfer it over. So, yeah, Estee Lauder looks interesting. Luis, on the topic of VFC, I finally got rid of that, and I'm heartbroken because I love the brand. Yeah, exactly. But the cut was sad. Already thinking of getting out of my small position, and that finally triggered. Yeah, definitely, man. Luis, I only wear Vans. Kevin Burgess in the building, guys. Glad to be part of the start of this series. Kevin, I'm happy to see you. I hope you're having a good morning over there. And thanks for tuning in. I know, Luis, I'm so sorry. Or Lucas, I'm sorry. Morning, guys. I've only had like half a cup of coffee today. Lucas, my virgin ears. I know. I'm so sorry. That one slipped. I did not mean to do that. Don't ever let me do that again, guys. But anyway, let's go take a look at what's going on in my portfolio. We saw what's happening around the market. And also, as we go through this, guys, I'm always trying to add to my watch list. I'm always trying to add new stocks, and I just use that as just a way to keep an eye on what's going on. Like I said, I see the biggest winners, the biggest losers of the day. And so it just kind of helps me stay in tune. So, and I think there's over 100 stocks on this list right now, but if there's any that you notice are missing and want to see added to this list or talked about, definitely put them in the live chat. I want this thing to keep expanding. The more the merrier. But anyways, going over back to the screen, take a sip of water. Let's go over to my spreadsheet here. So today, guys, at this point in time, my portfolio overall with my main brokerage account and my Roth IRA is valued at $52,115.73, which means we are about, well, just less than $48,000 away from reaching 100K in this portfolio. That is the walk to 100, guys. We still got quite a long way to go, but we are over halfway there, I'm proud to say. And today we are in the green, which is welcomed. We're up $143 overall, not much, about 0.3% gain. And let's see, most of that's going to come from the taxable account, definitely most of that. And then the Roth IRA is up a little bit as well, up 16. But let's go back over to Seeking Alpha and take a look and see what were my best and worst performers so far today. We could do that on the spreadsheet here, I suppose, but it's just a cleaner look. It'll be easier to organize it over on Seeking Alpha. But with that in mind, guys, if you guys want to download this spreadsheet, this is one that I give away for free. I know a lot of you guys already know that, but if you want to download the spreadsheet and start using it for yourself, there's a link in the description. Check it out. And real quick, let's go see where we are in terms of calories. So we're about 4,500 steps in. And oh, guys, we are getting close. We are at about 70 calories, so 30 to go, which means we'll probably, I would guess we're probably going to be end up streaming for another 20 minutes, maybe 30 minutes. So this one's going to be a bit of a long one today. In the future, I'm not trying to make them an hour long every day, but if I can make them 20 or 30 minutes per day, I think that'll suffice. But yeah, I guess I need to wake up earlier and start walking earlier. That's what that tells me. But anyway, guys, let's go take a look at my best and worst performing stocks for the day. Here's my portfolio. And looks like we got AT&T, Southern Company, Main Street, quite a handful up above 1%. No substantial gain really though. Like AT&T is the best performer at 1.8%. Okay. Now worst performer, it's also not too crazy either. Williams Sonoma down 1.3%. And this one's, I've noticed this one's start to come down quite a bit lately. So it was recently just at about, I think $160 per share, but in the last month it's down, looks like about 5%. We can see here, yeah, it peaked at about 160, just under 163. Oh, actually just over 163. It really had a big dip right here. Yeah, it went from, wow, lost almost $8, just about $8 in price. Interesting. And I'm wondering if that had to do, so when was that? That was the 25th, 26th. There's not really any news, so I'm just wondering if there was something going on market-wide that caused that decline. But yeah, Williams Sonoma's been a really good one for me so far, guys. I know a lot of you guys know that already. This is the newest addition to my portfolio. Average cost is not too bad, 133. With a current share price of 147, that puts me up still about 11% in just a few months. I started buying this back in June, so pretty nice return in a short amount of time. Now, I know there was mention of Realty Income at the start of the stream. Let's see. Yeah, I know there was some talk of Realty Income, and I see Stoner's Gym right here talking about it too, who's backing up the truck on Realty Income. So for those of you who don't know, Realty Income just announced that they would be acquiring a company called Spirit Realty Capital. SRC. I think it's Spirit Realty Capital, SRC. And SRC is pretty dang complementary to what we find as far as the portfolio goes with Realty Income. It's just another real estate investment trust. We're going to go take a look at it right now, and I'll give you guys some of my thoughts. Let me actually, bear with me a sec, guys. I had some notes that I took on this. Bear with me. I had some notes that I took on this in my database, and I want to pull that up and just read from that for you. So just give me a sec. I'm putting it up on the screen as you can see here. So go over to my stock database. Here, I'll actually jump over to the screen and show you guys here. So this is my dividend database, something I've been working on, and I essentially use this as my second brain for investing. So I use it to, like, I've written out an investing philosophy, which is going to serve as like my North Star, book notes. I'm going to start taking book notes for the things that I'm reading. Journal, if anything, if anything jumps out to me, I read something and I want to just jot it down real quick, I'll use the journal. But the stock database is the main thing. And we can see here, I'm still building it out, but this is going to house all of the stocks in my portfolio. This is going to be where all my research goes. And it'll eventually, I kind of want to get through at least all the stocks that I have. There's a couple in here that I don't, like Rollins and Shutterstock, but yeah, I'm going to use this for all of my stock research. Now, if we open this for Realty Income, we'll see all these different categories that I'll still need to fill out. But down here is a section for important news, notes, and updates. And when the news around SRC came out, I took some notes on that. And let's just link to the news real quick here. So if we click the link, open it up on Seeking Alpha. Once again, Realty Income bought SRC for $9.3 billion, an all-stock deal, which means that they essentially issued more shares of Realty Income to fund the deal. Now, just a little bit of background. When real estate investment trusts make acquisitions, there's a couple, or if they need money to do so, there's a couple different ways they can do that. They can go to the debt market, which means they can finance the deal. They can take out a loan. They can go to a bank, get a loan, kind of like, you would if you were buying a house and you were getting a mortgage. It's the very same idea. Or they can issue more shares. Now, because interest rates are so high, and these are both different tools that they have that they can use. And there are times where it makes more sense to go to the bank and get a loan. There are times where it makes sense to just issue more shares. And what will determine that, or one of the things that will determine that, is the I guess, the interest or the amount that you'll have to pay in interest on both. Now, what interest looks like when you issue more shares, it's more or less just the dividend yield. Okay, and Realty Income's yield right now is, in the 6% range, somewhere in there. It's getting to be the upper 6% range. So they felt that it would be more beneficial to issue shares and pay a 6 point something percent dividend instead of going to the debt market and having to pay what likely would have been a higher interest rate. So it would have been, in effect, cheaper for them to just issue shares, which is what they did in this deal. Anyway, going back over here, let's scroll down. So $9.3 billion is expected to diversify their portfolio. This is big right here. The deal is expected to add more than 2.5% to annualized adjusted FFO per share. Now, a lot of people hear Realty Income's issuing shares. They're diluting shareholders. That's not good. One thing to keep in mind is that it's for the reason that I just tried to explain. It is pretty normal for real estate investment trusts to issue shares. It's just one of the ways that they raise capital. And it's not always a bad thing. It can be a bad thing, but what you have to look for is it overall, is it a net positive? Is it net accretive to shareholders? Or is the company on a net basis going to be losing money by this deal? By doing it this way, I mean. And so as we can see here from Realty Income, this is expected to add more than 2.5% to their adjusted FFO per share. So based on what they say here, it's positive. It's not a huge gain. 2.5% is nothing crazy, but it's better than nothing, I suppose, right? So on a net basis, this is going to add to the funds from operation on a per share basis. And it's not enough. It's not enough to add 2.5% to the FFO. It has to be on a per share basis. That's what you want to look for, because that will tell you how productive the company is at basically putting those new shares to work. You know what I mean? So hopefully all of that makes sense. I think that's something that often gets confused when talking about real estate investment trusts, or that's something that can turn a lot of people off from investing in them because they see that dilution, but there's a purpose behind it. Anyway, so over here, SRC shareholders will get 0.76 shares of Realty Income, new shares that they'll be issuing. And that values each SRC share at about a 15% premium compared to when they close upon announcing the deal. So, or from Friday, excuse me. So anyway, there's some more details here, but in general, if we go back over to my dividend database, let me see if I can zoom in a little bit on this. I don't know if I can, but I can probably. Actually, this is what I wanted right here. So one thing that's, hopefully you guys can see that. How can I zoom in here? Let me see how I can open that. So can I do full screen? There we go. Look at that, guys. Okay, that's what I want. So the cool thing about this is SRC and Realty Income actually have very complementary portfolios. They had a lot of tenants that were the same. So Dollar General, Walgreens, you can see here on this chart, the orange and the blue. The orange is Realty Income, the blue is SRC. So we can see that they had all of these different tenants. Wherever there's blue, they had all of those different tenants in common. Home Depot, Lowe's, Tractor Supply, Walmart, CVS. You see them all here. Lifetime Fitness, not 7-Eleven, but FedEx. So there's a lot of complementary aspects to this portfolio. And if we look down here, 14 of the top 20 clients overlap on a combined basis. Exposure reduced in 18 of Realty Income's current top 20 clients. So by making this move, even though Realty Income's diversification was, nothing to be alarmed at, this is going to make the company even more diversified. Their top tenant here, Dollar General, after this acquisition, the delta is going to be down 0.4%. So it's going to decrease the diversification of this one tenant by 0.4%. Same thing with Walgreens, Dollar Tree's down 0.2%. So it's going to make their portfolio overall a bit more diversified. So, and it's accretive to shareholders, as we saw. So I think overall, this is a move that makes sense. It's pretty positive. It's really not, how do I say this? It's not out of left field for Realty Income. I think a lot of people could look at something like them buying the Wynn Boston Harbor last year, a couple years ago, whenever that was. Them announcing their stake in the Bellagio is something that's being out of left field. But this makes sense. This is more or less Realty Income's bread and butter. Now, one of the things that this does call into question is this is a pretty big move. So $9.3 billion acquisition, that's not nothing. maybe number one, this marks some more consolidation in the REIT space. Maybe this is going to be something we see Realty Income start to do more often, just buying up entire businesses, entire portfolios. And they've done this in the past too with, I think, the REIT. Am I pronouncing that right? Um, so this is not their first time doing this. But anyway, this calls into question how Realty Income is going to grow moving forward. Because of its size and scale, the acquisition makes them the fourth largest real estate investment trust out there. And due to the law of large numbers, as you get bigger, it's harder to grow, it's harder to compound. So because of Realty Income's gigantic size and scale, exponential growth and growth greater than 2.5% is going to be harder for them to come by. So it begs the question: will smaller deals still suffice to buying one-off Walgreens buildings, or excuse me, I almost tripped, or whatnot? Will that still suffice to move the needle for Realty Income, or will they have no other option if they want to continue growing at a respectable pace? Will they have no other option than to look for these bigger deals like casino purchases and large scale mergers and acquisitions? And that's kind of the question, the underlying question with all of this. And based on their recent moves in the last few months, which they've made a couple pretty big moves back to back. It's beginning to look more like the latter, which has some investors concerned that the growth won't be very hefty for Realty Income moving forward. Growth is going to be harder to come by. And another way to explain it is, imagine that this is going to be like a weird comparison. Imagine you're a fish, okay? You start off as a small fish, but as time goes on, you grow and you grow and grow till you become a large fish. And, periodically you're going to become a hungry fish. And for you to feel satiated, for you to feel full, and for you to continue growing, you're going to need to eat. Now, when you're a smaller fish, it doesn't take a lot for you to get full. You don't have a large stomach. So you could probably eat, some, I don't know what you eat as a small fish, but another small fish. But as you get bigger, as you become a large fish, and the larger you get, it's going to take a lot more small fishes for you to feel the same amount of fullness. You're going to have to eat a lot more to feel as satiated. Now, as you become this large fish, you have to wonder, is it worth my time to go and get all these small fish? And it might be easier because they're more abundant, but it's just not, doing much for me. I'm still hungry. So is it going to be worth my while to continue eating all these small fish, knowing that I have to continue to eat more and more and more? Or am I better off looking for a larger fish to eat? Maybe instead of eating 100 small fish, I just look for one big fish that I can, like a T-bone fish, or a porterhead fish, whatever. But some very large fish that's going to get the job done. And so that's kind of where Realty Income's at. They can either buy up a ton of small fish or eat up a ton of small fish, or they can look for these larger fish to move the needle. But that weird comparison, I know. But anyway, that's kind of what it's looking like for that company right now. But another question is does this make Realty Income a bad investment? Not necessarily. I mean, as we saw, the deals they're making, they've historically been very solid underwriters, and the deals have worked out very well for them. So we have no reason to believe, I don't think, that, at least yet, that this should be any different. But at the same time, more frequent mergers and acquisitions does create some risk, because it opens up the potential that some of these don't work out very well. They don't end up being very accretive. So that'll be something to keep an eye on. And, it's got a lot of investors wondering, is this stock even worth investing in? If the growth is going to be slower, if there's this increased risk, if they're only growing by just buying other companies now, should I just look elsewhere? Possibly. You might find more growth elsewhere. Just due to the large law of large numbers, you may, if you're looking for more frequent growth or more substantial growth or more aggressive growth, maybe look for a smaller company, because it's going to be easier for them to compound. They'll be able to, smaller deals will move the needle more for them. So, and those may be easier to come by. So that's something definitely to keep in mind. But still, I think Realty Income, historically, it's been a very stable, been a very reliable real estate investment trust. And if we go back over to the screen here, go over to Seeking Alpha, we can see that. I mean, we'll just take a look at the financials real quick, looking at the revenue. This is really, I mean, it's really jumped up in the last between 2021 and 2022. But otherwise, guys, it's been a very steady grower. Okay, not super aggressive, but consistent. Okay, and we see that in a lot of other companies. Think Procter and Gamble, think Johnson and Johnson, think ones like that. Think about companies like that. It's kind of the same thing. Not super aggressive growth, but growth nonetheless. Now, if we scroll down, look into, and over a long period of time, by the way, that's where, if you can be patient, you'll fare pretty well over a long period of time. Now, the funds from operations, same thing. For most of the last 10 years, not super aggressive growth, but very steady. Okay, and we know that to be true in the dividend department as well. Where is the dividend? Dividend per share right here. We know that to be true in the dividend department. This is the monthly dividend payer, the monthly dividend company, excuse me. And I think at this point, they've got close to 30 years of consecutive dividend growth. If we go over here, okay, the yield 6.5%. The 5-year growth rate's not very aggressive, less than 4%, but the consistency's there. This says 25 years, but they're coming up on 30 years of growth. I think they've been growing this dividend ever since they went public back in 1994. So looking at this chart here, it's like, yeah, that's pretty solid. If this trend continues, over a 10, 20, 30-year period, you're going to be all right. So let me see. Let me go back over here to the live chat. And I'm sorry, guys. I'll make sure this is fixed tomorrow. I know we got the lights here. We only have 10 more calories to go, so we're almost there. So let's see. I'm about 10 minutes behind here in the chat. Russ says he popped in to say hi. Realty Income grows stronger and is very well diversified. Yeah. Ryan says for the long-term investor, it's a positive move. Let's see. Yeah. Hoy says, I'm happy. My average is now 48.93. And I'm so sorry about this, guys. I know it. When this happened with the dividend happy hour, it was very distracting. So yeah, 48.93 is a very solid average cost per share. Smart Joker, can you throw a couple of squats in while you walk? I can, but I probably won't. I'm gonna lift weights later today, so that'll be good. I don't need to do squats. Let's see. Yeah, fish sticks. You guys talking about that? So yeah. We're watching Ryan descend into pescatarianism. Yeah, fish is okay. I don't eat fish that often. I like a good salmon fillet, but I'm not a huge seafood person. I'll eat some shrimp. So be still. I'm really enjoying this, Ryan. I think you're hitting your stride. Well, thank you so much. I really appreciate that. And I'm sorry, too, for those of you guys who were here from the very beginning. Like, I went on for about 20 minutes, but I felt the backstory behind this stream and this idea was really important to hone in on. In the future, I won't spend as much time talking about it, but since it was so new, I wanted to just explain my way of thinking behind it so we were all on the same page. So Jack here says, Realty Income is my second biggest stock, so I might have to slow down my contributions. Yeah, it's become, I guess it's been one of my bigger ones. It's my fifth biggest position right now. Well, actually, I'll just show you guys. I'll show you my top 5 here. If we go back over here, go check out the spreadsheet. Can you guys tell that I'm getting out of breath a little bit? I'm definitely starting to feel it. Let me zoom in a little bit. So this is how my portfolio is diversified by weighting, not by income. We'll take a look by income in a moment. But right now, biggest position, Procter & Gamble. Second biggest, Starbucks. Johnson & Johnson, not too far behind Starbucks by about, a fifth of a percent, or a quarter of a percent, rather. Fourth biggest position is Lowe's. And then Realty Income right behind Lowe's. They are neck and neck. And this week I bought some more Lowe's. So I picked up, I think 0.8 shares of Lowe's, invested $150 into that. And then anyway, Realty Income, fifth biggest position, 6.6%. But it's going to make up a much larger portion of my overall income. In fact, right now, this is my highest income generator, making up 8.7% of my portfolio's total income. So for me too, this is one that I feel that I need to be careful with. I don't want any one position to be too overweight in my portfolio, either in terms of just how much is invested in it or how much income it's generating across my entire portfolio. So my rule of thumb is about 10% in both departments. So Realty Income is getting close to be up on the top of that, 8.7. We still have a little bit of wiggle room, but I'm not sure I want to get it up to 10%. Something I really need to think about. I guess that wouldn't be too bad. And as I'm saying this, I'm thinking, I just don't. I feel confident that Realty Income will continue to pay the dividend and grow the dividend. So why wouldn't I allow it to get that high when the price is so much farther below my average cost per share? So that's just something I need to think about, I suppose. Cool. I appreciate your guys' support here on the stream. You guys have only had positive things to say, so I really appreciate that. I have all these different ideas for videos I want to make and things I want to do and things I want to create, and over time I'll hash them all out one by one, but and not all of them are going to be good, but I really appreciate the support and you guys tuning in and taking a chance with me on this and spending time with me, and I hope you guys enjoy it. I hope as we do this throughout the month, I hope you guys come to enjoy it more and more. Like I said, this is the first one, so it's going to have some kinks. I was actually kind of nervous to start this one. When I do the dividend happy hour, I'm like cool as a cucumber, no nerves, no nothing, but this one this morning, not really knowing how it was going to go and not really having too much of a direction with it, I was like, God, I'm just a little bit nervous. You know what I mean? Plus, I don't know if you can tell, I've got some pretty serious bedhead. So that's not good either. But anyway, let's keep going on. Thank you guys once again. Seriously, I can't say it enough. So Michael here says bench press max. Right now, so I actually benched yesterday. I didn't max out. I haven't maxed out in a long time, but I was able to do 225 for 5, about 175 pounds right now. But when I was at the top of my bulk, when I was at my heaviest, I bet my max was, I bet I could, and I never tested it, but like I was doing 225 for 10, sometimes even 12 reps, which is the strongest I've ever been. I don't know. I really have a hard time putting a number on it because I really just don't know. But I can tell you when I lose weight, my bench strength is like one of the things to go. My bench strength and my squat strength are two of the first things to go, and actually shoulder press. So pressing movements aren't the best. Pulling movements I stay pretty strong at. Weighted pull-ups, love doing those. I can still, even as I've lost weight, I can still hit quite a handful of reps with like 45 pounds. 45 pound weight doing pull-ups. Deadlift, I think my most impressive deadlift, this was a few years ago, I was like 155. I would really leaned out 155 and I was still able to pull 405 conventional. But right now I could probably do, and I haven't deadlifted for quite a while, but I could probably max out maybe 350, 365 on deadlift if I really was like fresh, like in the perfect scenario, probably about that. I bet I could, yeah, probably about that, but I really don't know. Ryan here says, do you lift at home or go to the gym? I do both. Well, kind of, sort of. So at my apartment, we have a really nice workout facility. It's got free weights. It's got, a couple different squat racks. It's got tons of cardio equipment, tons of machines. Dumbbells go up to 65. So it's all pretty solid. So most of the time I honestly just work out of my apartment gym, but I have a gym membership at an EOS Fitness, which is just, I think they're actually owned by Gold's Gym. I'm not 100% on that, but I have a membership to EOS Fitness, just kind of a big box chain gym, for $10 a month that I go to. So it's usually 50-50. So, but yeah, I do both. It just kind of depends what I'm doing, but most of the time I'll say I really just like going to my apartment gym. It's convenient. A great majority of the time when I go down there, there's either like no one in there, so I'm the only one, or there's maybe like one or two people in there, so it never gets crowded. It's kind of like your own space. It's really nice. Let's see. Where are we at, guys? Oh, we are at 99 calories. So we're about to wrap it up, guys, but I want to get caught up here in the chat. So a few more questions and we're going to close it up for the day. So, hey, Ron, I want to dump a whole lot of cash into Altria because currently I haven't gotten a position in it. Do you think it looks like a hit right now? I think if you are just starting a position and you feel okay about Altria's long-term prospects, I think it's one to consider for sure because it's really come down. I think it's below $40 a share right now, right? Or close to it, kind of in that range. So I don't think right now is a bad time to really consider Altria Group if you feel good about what the company's going to look like 10, 15, 20 years down the road. But obviously I can't make that decision for you. That's something you'll have to come to your own conclusion on. So it could be. I know a lot of people in the Discord group have been buying Altria just based on it does look like to be at a pretty attractive valuation. But Rui here says, how often will this be live? So Monday through Friday for the next month, throughout the entire month of November, we'll be live Monday through Friday, 7 a.m. Pacific time. Excuse me, 10 a.m. Eastern time. So yeah, every morning. So we'll be going live tomorrow and Friday. And also, just so you guys know too, this isn't going to affect the other regularly scheduled programming. So I'm still going to put out videos Wednesdays and Sundays. I have a portfolio update video coming out today, which a lot of you guys might not want to watch because we saw where my portfolio's at today. But I'm putting out my monthly portfolio update video later today. And then, we're still going to do the dividend happy hours. Still got Sunday video coming out. So this is just something I wanted to try out and see how it works. But a couple notes too before I do sign off. I'm going to be posting, so the Wednesday videos, I usually put them out at like the same time that we started the stream this morning. So I'm going to put it out later this afternoon. You guys will have a video from me later today at 1 p.m. 1 p.m. Pacific time, which is 4 p.m. Eastern time. So got a video coming out there. We're still going to stream on Friday night. But I'll also see you tomorrow morning for Walk to 100 episode 2, and we'll see what's going on in the portfolio. There's one other thing I wanted to mention. Let me see. Gosh, I cannot remember. I honestly can't remember. I thought I had one more thing that I wanted to share with you guys, but maybe I didn't. Maybe that was it. I think that was it, guys. I think that was it. So we're gonna. I'm actually just gonna stop this. Say my last goodbyes. Gosh, I know there was something else I wanted to share with you, but I don't remember. We'll talk about it tomorrow, I'm sure. So in total, guys, let me just tell you too. Oh, I know what it was. Hang in there. Don't leave yet. So one thing I want to do at the end of these streams, when I hit 100 calories, I just want to tell you guys how many steps, how many miles and stuff like that. So guys, we are currently at 2.02 miles. Okay. So just over 2 miles already today. It's not even 8 a.m. We are at about 6,900 steps. Guys, haven't even broken a sweat. And, like I said, as far as calories, we are at 103 calories. So great way to start the morning. I feel really good. I feel warmed up. It's starting to get really cold here in Vegas. So getting the blood moving here in the mornings is definitely needed. But what I wanted to share with you guys was what I'm going to start doing too. I'd like to get to a point with this, if this becomes a regular thing and I just keep it going after November. I'd love to get to a point with it where I'm just doing daily buys in the portfolio and doing it in real time on the stream and updating it for you guys in real time. So another thing, as they come in and as I have them to talk about, I'll talk about my purchases in addition to just, my portfolio's best and worst stocks for the day, the market value, stuff like that. I'll also be sharing my purchases, and I'll also be sharing my dividend income when it comes in. And today I actually meant to show that. Today, if we go over to the payout calendar tool on the dividendtracker.com, which you can also use for free. There is a link in the description, but this is my favorite tool on the dividend tracker right here, is this payout calendar. Today, guys, it'll be a pretty nice day of dividends. I'll be getting dividends coming in from AT&T and Verizon, and I don't believe they've hit my brokerage account yet, but they should be hitting. They usually hit after the market closes, but yeah, I'll be getting that today. And how about this? Tomorrow, once those payments come in tomorrow, I'll be doing my first live purchase here on the live stream. And I used to do this back in the day. For those of you who've been, watching the channel for some time, I used to do Market Mondays where I would just buy in real time and put out a video on it. So we are going to, we're going to start doing that here on the streams as well. I'd like to get it to a point where it's daily, but we'll have to see what happens. And yeah, that's about all I got for you guys. So once again, thank you so much for all the support. There's about 100 of us still here. Great crowd, great morning crowd. So, but I appreciate all the support. I appreciate you guys tuning in, taking a chance on me here with this new live stream series. I hope you enjoyed it. It was fun for me. I'm a bit out of breath. My voice is a little hoarse, but yeah, I'll see you guys tomorrow morning for the stream, same time, same place. You guys be sure to get your steps in today, get your calories burned, get your lift in, get your stock spot, get your dividends reinvested, do all the things. And don't forget, I'll be putting out another video here later this afternoon at 1 p.m. So it'll be my portfolio update videos. And I know I've said that 1,000 times, but guys, we are signing off. Thank you once again. I really appreciate all the support. You guys are the best. Hope you have a great day, and check out the video later today and leave me a comment there. Say what's up. I'd love to hear from you guys. So yeah, have a good one, and I'll see you in a bit.